We know of this single loan agreement, which is the biggest one for the DBSA outside of South Africa. Just tell us more about the opportunities you see in Zambia and the spin-offs.
Well, Lorato, Zambia is a very special country. Many people think of it as a landlocked country, but being landlocked also presents opportunities. They have 8 neighbors all around, so they're dead center in the middle of Southern Africa. So what that does is, when you open up the road network in Zambia, what it does is it actually creates and enables connections with literally eight other countries. So Zambia is a very key country in that sense, almost comparable to Switzerland in Europe, being right in the middle of Europe, even though it's landlocked, a very key country. But of course, Zambia is a country that, apart from being well positioned, is a very a rich country in terms of mining potential, tourism, and agriculture. Everybody knows agriculture is the big story these days in Africa. It's a big priority. In the case of Zambia, I heard that there's almost 500,000 hectares of agricultural land that is very amenable to being irrigated and to producing very high levels of agricultural product. Only 3% of it is irrigated at the moment, but just imagine 97% more of that land being irrigated. Can be a breadbasket for the region. So
obviously its geographic positioning makes it strategic in the Southern African context, but Zambia is just one of a series of fastest growing African economies in the year 2011. Are you looking at expanding your tentacles for financing other road projects outside?
Very much so. In fact, DBSA has had a very good experience now for, well, good about 15 years. We've begun financing infrastructure projects outside of South Africa. Now we have a balance sheet of close to 10 billion rands, just offshore assets or assets outside of South Africa. It ranges from the power sector to the transport sector to the ICT sector, even agribusiness, which is not always very easy to finance.
Okay, now looking at Zambia, there are some peculiarities, and it has to do with Zambia's relationship with the Chinese, for instance, where they've been heavily invested in the mining sector, equity in mines, and with that they've also been involved in infrastructure development. So just in terms of competing for space, for lack of a better term, with the Chinese, is it competition or partnership?
Well, you know, we have worked with the Chinese on a number of occasions. On this particular project, we've not seen the Chinese coming in precisely on this one, but we wouldn't be surprised to see, you know, China coming in to finance other roads. Zambia has a huge requirement for development finance. In fact, the whole continent has a requirement of $93 billion per annum. 31 billion of that is a shortfall. So the Chinese, South Africa, the World Bank, the African Development Bank, even if we were all to come together, it would be difficult to meet that shortfall. So there really is enough for everybody to do.
I'm glad you mentioned the deficit in infrastructure and what's needed per annum, about $100 billion. We've heard African leaders, certainly at multilateral levels, such as the AU, pledge to raise capital in this respect. And we are seeing countries like Kenya, where the government is launching infrastructure bonds, Nigeria as well. But there is there is a sense, and it could be a wrong sense, that pledges are made verbally, but tangibly it has to be the role of development finance institutions such as the DBSA or the private sector through public-private partnerships. What's the approach?
Well, you know, the truth is the infrastructure financing requirement is big. You need bank funding, you need bond markets, you need aid if you can get it on the right terms. So it's welcome to have multiple streams of funding to help sort of meet this big requirement. The capital markets in Africa have not been very well developed. South Africa is one of the few. There are several others. We see stock exchanges coming online in various countries. We see bond exchanges coming online. But these are not very well-traded markets. They're not very deep. So the experience of Kenya is a very welcome one, and there's very strong efforts in other countries to follow suit on that. But again, these are just an initial set of bond issues. So there's going to be a much bigger set of such issues to begin meeting the requirements.
In terms of the DBSA's role in terms of meeting the funding gap, I mean, you expect to see funding growth somewhere in the region of 300% growth in the coming years across your investments in Africa. But you're doing business in a continent that's regarded as high risk. How do you overcome some of those risk perceptions?
Well, a lot of those risks are perceptions, others are real. We are very careful in the way we make investments. We are a bank, so we are expected to do that job fairly well, and so far we've been doing it rather okay, I would say. So we have a very good performing portfolio. We don't have any major losses that we've been writing off. We do our due diligence, we do our homework, we work out non-performing assets when things go difficult. We try to bring them back to a performing stage. So yes, it's not easy. Africa's not always for the faint-hearted, as we say, but you do have to keep your eyes open and do your homework.
In terms of the general appetite for infrastructure financing, we know that, for instance, within the mining sector or construction, we see a lot of interest from the private sector because there they see higher yields, higher returns. But general things such as roads, for instance, dams, whatever it may be by way of developmental priorities, there isn't a sense that there's a lot of that sort of appetite for investment. Why is that, and how can we get around it?
Well, Lerato, it's true. I think the stereotype has always been that Africa is an extractive industries play, and that's been most of the investment that we've seen over the years. But there are new areas opening up. In fact, agriculture is the big surprise over the past few years, and as you may have heard at the discussions at the World Economic Forum, there's a lot of talk of land grabbing, a lot of concerns around the way in which these big deals around land and agriculture are being done. So it shows a whole new level of investor appetite in Africa. It's not just for the sake of agriculture and exporting the land, but the whole world has also realized that Africa is almost 1 billion people today. It's a continent that represents a future market that is very, very attractive. So it's not just going to be the old story playing itself over again. It's going to be new sectors receiving investment at a scale that we've never seen before.
By the DBSA's assessments, where are the growth nodes?
Well, I think if you were to look at the infrastructure subspace, I think the power sector is a huge growth node. I think the previous decade was ICT. We saw mobile telephone companies sprouting up all over the world, all over the continent. 90% of African countries now have licenses that they've issued. We've financed a lot of those. It's been a great success story for many development banks. The new wave is going to be power, as you have asked, and also transport to some extent. We're going to see more public-private partnerships in the transport sector. We've seen about 10 such PPPs in Africa over the past decade. I think the next decade will be several multiples of that. Let's keep our fingers crossed.
All right, so of the $3 billion investment that's projected to come from the DBSA going forward, which are the areas you're targeting outside of Zambia? We're told you may be interested or already active in Zimbabwe, the DRC.
Zimbabwe, DRC, Angola, very much so. So those would be 3 specific countries, but we're open for business in the whole region. We have a diversified portfolio. We serve the whole region. We have enough capital to provide for any bankable project, so to speak. So I think in terms of absorptive capacity, there are some countries in the region that are big and that have very strong economic fundamentals working for them. We expect those countries to be the most likely to be able to access a lot of our capital. Angola is clearly one of them. Zimbabwe has a huge requirement. They're coming out of a difficult situation. We believe that Zimbabwe will also be a major borrower of the DBSA going forward.
I mean, just a final question, and this is sort of slightly offsides. I mean, obviously the DBSA has South Africa as its steward in many ways, and that almost puts a lot of responsibility on South Africa to come up with the channels for funding within the sub-region. What other sort of commitments come from other countries within the region?
Well, as you say, I think part of our experience has been based in a country like South Africa, capitalized by the shareholder, which is the South African government. We've had the benefit of also following the experience of the financial sector across the board in South Africa. So the governance standards, the practices, the capabilities, the skills, all of this has benefited DBSA in the same way it's benefited the whole financial sector in South Africa. In terms of access to capital, almost 1/3 of our capital is sourced outside of South Africa. We have some bonds. We also have lines of credit. We raise it from Europe. We raise it from the East, from Japan. So there's all sorts of possibilities going forward. It's not purely sourced off of South Africa's capital base. I think what we've done is we've created such a strong model that gives a lot of comfort to various creditors around the world to channel infrastructure financing through us for the benefit of the region. We even carry very large trust funds from donors for the benefit of the region in hundreds of millions of dollars. And so it's a vote of confidence in an institution, an African institution that can manage funding very well.